Let's dive right into this rapid-fire market recap for July 28th. Time to break down today's drivers. Here's the agenda: macro tone, sector leadership, key after-hours earnings, and your setup for tomorrow's open. Strong broad earnings actually pushed the Dow up a solid 1% today, leading the major indices. Meanwhile, the S&P 500 squeaked out a 0.2% gain, totally kept afloat by those non-tech sectors. But the Nasdaq, it slipped 0.2%, really dragging under the weight of continued weakness in semiconductors. Look at this stark divergence. The equal weight index massively outperformed the cap-weighted S&P 500 today. Over in bonds, U.S. Treasuries climbed for a third straight day, pushing the 10-year yield down to 4.60%. And crude oil literally plummeted 4% to $79, driven by potential Middle East transit agreements. Drilling into sectors, healthcare and staples led a defensive charge, while that falling oil absolutely crushed energy. But the real bleeding was in chips. The semi-index tumbled 4.5%, while broader tech barely flinched. The massive takeaway here: semiconductors have shed nearly 23% this month alone. That's a violently aggressive rotation. After the bell, Teradyne, Bloom Energy, and Ford all surged on massive earnings beats and raised outlooks. Conversely, KLA Corp and NXP sold off sharply. Guys, inline guidance just isn't cutting it right now. Looking at tomorrow's setup, we get SK Hynix earnings pre-market and then that massive FOMC policy decision. Why this matters: the SK Hynix print is a totally crucial bellwether for AI memory demand and pricing. Then, all eyes on the Fed. The CME FedWatch tool is pricing in a 31.5% rate hike probability. So, will the Fed accelerate the sector rotation, or can AI earnings actually halt the semiconductor slide?